Hey there, savvy investors, and welcome back to the channel. Today, we're diving deep into a stock that's flashed brightly on our hard-to-bar screener, CIIT International Inc., ticker symbol CIIT. If you've ever wondered how short squeezes ignite or what cost to borrow truly means, you're in the right place. We're going to break down CIIT's unique situation, explain the mechanics, and highlight what makes this microcap logistics play worth watching. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So let's talk about CIIT. CIIT International Inc., through its subsidiary Roshing International, operates in the industrial sector, specifically integrated freight and logistics. They provide crucial logistics services, primarily ocean freight forwarding and container shipping across a wide geographic footprint including Hong Kong, Vietnam, Japan, Zimbabwe, and South Korea. This is a very small company with a market cap sitting around $3.06 million. Show CIIT logo/stock chart. Looking at recent price action, CIIT has seen some significant volatility. Today, it's up plus 2.45%, up plus 4.74% over the last 5 days, but check this out, a staggering plus 422.22% increase over the last 30 days. This kind of explosive move in a microcap always catches our attention. What is cost to borrow and why it matters? Before we get into the specifics of CIIT, let's quickly cover a core concept, cost to borrow, or CTB. When an investor wants to short a stock, they first have to borrow shares from another investor, typically through a broker. They then sell those borrowed shares, hoping to buy them back later at a lower price, return them, and pocket the difference. But borrowing shares isn't free. There's a fee involved, an interest rate essentially paid daily to the original owner of the shares. This is the cost to borrow. A high CTB indicates strong demand to short the stock and slash or a very limited supply of shares available to borrow. Think of it like renting a rare item. The rarer it is, the more expensive the rent. Why this stock is hard to borrow right now. Now, why is CIIT on our radar? Because its cost to borrow fee is through the roof. We're seeing an annualized CTB of 850.1%. Highlight CTB number that is an extremely high number, reflecting intense interest from short sellers or, more likely, an incredibly tight supply of shares available to borrow. With an estimated float of just 7.3 million shares, if many of those shares are already tied up or held by long-term investors, the pool for short sellers to dip into shrinks dramatically. While we don't have current real-time data on the exact number of shares available to borrow, a CTB like this usually means the well is running dry. Our internal composite squeeze score for CIIT currently sits at 52.5 out of 100, which suggests a developing situation that warrants close monitoring. Squeeze mechanics explained. So, what does a high CTB mean for a potential short squeeze? Imagine you're a short seller and you've borrowed CIIT shares. You're paying 850.1% annualized to hold that position. If the stock price starts to rise, as CIIT has recently with its plus 422% move over 30 days, your losses increase and your cost of borrowing eats into your capital faster and faster. At some point, the pressure becomes unbearable. Short sellers are forced to buy back the shares they borrowed to close their position and stop the bleeding. When many short sellers are forced to buy back simultaneously, it creates a cascade of buying pressure, driving the price even higher. This is the essence of a short squeeze. It's a self-reinforcing upward spiral as shorts cover their positions. Dilution risk check. An important check for any potential squeeze play is dilution risk. Dilution occurs when a company issues new shares, which increases the total share count and can offset buying pressure by adding supply. For CIIT, we've reviewed their SEC filings and found no recent dilutive SEC filings such as -1s, -3s, or 424Bs within the last 90 days. This is a positive sign, as new share issuance could otherwise negate or significantly dampen any short squeeze potential, even with a high cost to borrow. Recent reverse split watch. Now here's another critical piece of context for CIIT. The company executed a 1-for-10 reverse stock split just 17 days ago, on July 20th, 2026. Highlight reverse split date. The reverse split reduces the total number of outstanding shares and resets the share price higher proportionally. While it doesn't change the company's market cap, it reduces the float and can make the stock appear more attractive to institutional investors who might avoid penny stocks. Historically, we've observed a pattern in many microcap stocks where renewed volatility or a significant price pop can occur within about a month after a reverse split. This isn't a guarantee, of course, but it's a tendency worth noting, and CIIT is right in that window. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For CIIT, with its 850.1% cost to borrow, an estimated 7.3 million share float, recent price surge, and post-reverse split timing, there are several factors in play. We'll be watching for continued low available shares to borrow, any further increases in CTB, and a significant increase in trading volume beyond its current 0.1x relative volume compared to the 30-day average of 1.1 million shares. Remember, a high CTB doesn't guarantee a squeeze. It can also indicate that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to stay short. It's a battleground, and volatility should be expected. CIIT International Inc., or CIIT, is a fascinating case study in the world of hard-to-borrow stocks right now. With the eye-popping 850.1% cost to borrow and its recent reverse split, it's definitely on our watch list for educational purposes. We'll keep an eye on this integrated freight and logistics play as the situation develops. What are your thoughts on CIIT? Have you seen other stocks with such high borrow fees? Let us know in the comments below. If you found this breakdown helpful, please smash the like button, subscribe for more in-depth analyses, and hit the notification bell so you don't miss our next video. Thanks for watching, and happy trading.